Hello, everybody. This is Toni Turner, and welcome to the Market Now as of Friday, December 22nd at about 3 p.m. Eastern. Before we start, please know that all of us at ToniTurner.com wish you and your loved ones a very Merry Christmas and a wonderful holiday season. And now, on to the market. Well, good news here. U.S. prices fell in November for the first time in more than 3.5 years, pushing the annual increase in inflation further below 3% and boosting financial market expectations of an interest rate cut from the Federal Reserve next March. Guess we can wait that long. The PCE report this morning from the Commerce Department also showed that underlying inflation pressures continued to subside last month. Cooling inflation left more income at the disposal of households, helping to underpin consumer spending and the overall economy as the year winds down. And on that pretty positive note, we'll go on and look at 3 charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Now, this is, of course, the exchange-traded fund that closely follows our benchmark S&P 500 index. When I captured this chart today, the SPY was trading, you can see right here, at $472.23, about 47.22 on the S&P 500 itself. We can see that it is still in a consolidation move, and that started on December 14th. Right about here, and it got up to this point, which is actually very close to the all-time highs. So it got up to this point on December 14th, and just started walking sideways, which I can certainly understand, given the very strong uptrend that we've had so far since this last October. The RSI here, this down here, the 14-day RSI remains over the 70 line today. It's just coming down to it. When that is over the 70 line, it means the market is overbought, at least in the short term. However, price staying sideways instead of, well, it fell down the 1 day, 2 days ago, but actually staying in this sideways motion does show that buyers have strength here. Now, we know that when buyers buy, price stays where it is or goes higher. When sellers sell, they push it down. So far in this consolidation, the buyers and sellers have about an equal amount of power here. So we held prices here for the past week at about 470 to 475 level, and with the buyers and sellers being pretty equal all in all. And of course, our price today at 472 is barely below its all-time highs. The SPY's all-time highs in January of 2022 came in at $479.98. So we're doing pretty well here. Now we know that right back here, after the SPY fell and dropped from its July high, from rising in an uptrend earlier in the year, it came down in what I call a reluctant downtrend, making lower highs, lower lows, all the way down through the 50-day moving average, the green line, the 20-day moving average, the red line, and the 20-day was inverse from the green, so it had already cut down through, came and fell down through the 200-day moving average. At that point was still moving a little higher, but price fell right through it down to the October 27th low at $409.21, and that's an 11% drop from this July high. It came down, and you can't see it here, but this 409 low here was from a prior support resistance actually in May. Now, right here in October, as we've talked before, this is when interest rates started falling. We know that stocks like falling interest rates, low interest rates. Stocks do not like high interest rates. It's pretty much that simple. So when interest rates started to fall from this July low, October low at 409, the SPY bounced here. Of course, we had some short covering here as well. the SPY bounced and moved up almost in a straight move up. A lot of buying, a lot of short covering. Then it moved up to about 455. Up through the 200-day, the 20, the 50-day moving average. And it moved up very, very quickly, even gapped up here, finally moved up to about 455 and consolidated for a couple of weeks here, then right up to December 14th that I talked about a few days ago to 472, and then consolidated again in this basic range from 468 to 474, where we are now at 472. So the SPY has done a really good job in moving in an uptrend. Once it got over the 20-day moving average, we can see that it traded at a premium to that 20-day. That's a good thing. It did move up and over the 50-day moving average when it got to 435 here, and then gapped open on this day to just to about 443. But we have to remember that if we stand back and look at the big picture, this is a very steep uptrend. We did have this consolidation at 455, but then it came up again. And so we know that the bulls and bears are arguing right now. Price is moving sideways. The angle is steep, and the RSI is still remaining kind of overbought. So let's keep an eye this coming week on price in relationship to the 20-day moving average. 20-day is coming in now at $463.19. We have support down here at 468, and the 20-day moving average at 463 right here, as I just said. Then down at the 455 zone. So again, keep an eye on the 20-day moving average this week. And remember, trade to trade well. That's what we do. We trade to trade well. That's the way you make the most money. Our next chart today is the daily chart of the Invesco QQQ, symbol QQQ. This represents the top 100 non-financial companies by market capitalization in the NASDAQ 100, which is an important index in our market. This includes all the big momentum and tech stocks, including Apple, Meta, NVIDIA, Microsoft, that whole group, Tesla. Now, when I captured this chart today, the QQQ was trading at $407.19, very close to its all-time highs from November of 2021 at $408.71. I mean, for all purposes, we're back up to that all-time high in November of 2021. Now, we know that from July back here, the mid-July, everybody had the mid-July relative high, and this one was at 388. From there, it fell down in kind of a sideways, soft, but definite downtrend, lower highs. The lows here weren't a lot lower, but somewhat, and then it fell down to about the 200-day moving average on October 26th. Fell down to that low at $342.35. Again, just atop the 200-day moving average. Again, this was the same time in October that interest rates started moving lower. So the buyers came in, the shorts started to cover, and the Qs started up in a steep rally back above the 20-day, back above the 50-day. Then gapped open right here on November 14th. The SPY gapped open then too. And the Qs opened at $383.71, and then moved sideways and then continued to climb off the 20-day. So it consolidated here in a range from 383 to 394. And that's what price either, when it's in an uptrend, it either moves in a pullback, we'll call it, and that would have been if it had to move back down a little bit and then start up, make a pivot. It either moves down or sideways. I mean, there's only three ways price can go, up, down, and sideways. That's it. That's all it's got. So if it moves in a sideways motion, that's bullish, because it means that the bears can't push price down. The bulls are literally holding it up by buying. So it moved in that consolidation, and then it consolidated along in a range right here. I lost my place. And then rallying again to the right up here to the December 19th closing at $409.28. And that was actually a few cents above the all-time high I mentioned a little earlier at $408.71. So we're back up to the old highs. There's no doubt about that. The RSI here is still overbought, not terribly, but it's on the 14-day line. Like the SPY, like the SPY, the Qs have support right here at their 20-day moving average at $396.50. More potential down here for support around 388, 383. We've got the 50-day moving average at 379.91, so call it 380 if you like. This uptrend is bullish, but it is steep, and I recommend keeping an eye on the 20-day moving average, just like we're doing with the SPY in the coming week, and keeping our stops in place very definitely. Our last chart today is a daily chart of the Global X Lithium and Battery Technology ETF, symbol FLIT. We've traded this before. It has 40 holdings. Everything I'm looking at today looks overbought, so I did have to search to find some things that look like they're coming off their bottoms. I'd rather buy low and sell high than the other way around. And this looks like it has a little promise here. The Global X Lithium and Battery Technology ETF has 40 holdings. Some of the top holdings include Albemarle, TDK Corporation, Tesla, LS Energy, and Panasonic. Now, when I captured this chart today, the LIT was trading at $50.38. Now, you can't see it on this chart, but the LIT made an all-time closing high on November 2021 at $97.13. And again, you can't see it on this chart. It goes back too far, but now as we're looking at the left side of this chart, we can see the last relative high here. It was in July, like everybody. It made a July high at $69.09, and then like almost many other industry groups, interest rates started to climb, and the LIT, we'll call it, fell in a downtrend, and it lower highs, lower lows, all the way down and under the 20-day moving average, of course, under the 50 and 200. It moved down to its recent low, all the way down here in December. It moved to its recent low here to $45.80. And I watched this happen, but I was keeping an eye on the volume here, because when price falls dramatically, and this one certainly has, when it falls dramatically, and many ETFs did, and stocks, but then I watch the volume to see when people start buying, when traders start buying. Volume started coming in, and the LIT from this move down here, the low at 45.80, it started moving back up again. Then on December 14th, look how it made a higher low. Look at the volume coming in here. Look right in here. See when this low was made? Then look at the volume. All of a sudden it starts changing from the prior month, from November, October, December, September, I meant to say. So I watched it. Volume started coming in. Price started moving sideways, went back up through its 20-day moving average, and on December 14th, it actually gapped up a little bit and ended up closing here at $49.25. Well, that's not enough to get me in, but I've been watching it for the next week, and for this past week, it's managed to sidestep like many assets have, and then today it kind of bumped up over these highs and again closed at $50.38. So it may not be the most exciting ETF in the world, but no telling what's going to happen in the next 3 weeks. If in the coming week the LIT stays above the 20-day moving average, that's the red line, which is now coming in at $48.25. So that's where the 20-day moving average is. If in the next week the LIT stays above the 20-day moving average at 48.25, I will add a small position to my trading portfolio, and I'm going to have a pretty tight stop in here at $47.75. If and when the LIT climbs above this level here, which is actually $51, if and when it can move above $51, I will add to my position, and of course by then I will have a trailing stop. So you may want to keep an eye on the LIT in the coming week. Now, if you'd like to become a more successful trader, this is a great time, while the market's kind of wandering sideways, to check out my online training programs. You can choose from 10 different programs, including our popular flagship product, 7 Steps to Successful Trading. If you'd like to learn how to swing trade, which I love in markets like these, we have how to swing trade successfully. We have trade the trend to profits. I love trend trading. I love how to read charts for novices. 3 winning setups, great for short-term traders, and bottom fish like a pro, which again I'm looking at this trade of the LIT we're just looking at here. If you'd like to learn how to do any of these strategies, check out these timeless programs. They will show you how to elevate your trading skill set and how to increase your gains quickly and easily. Check out all of my training courses online by going to the link on this screen or simply click on the orange button below. Again, Merry Christmas and Happy Holidays. I wish each of you a healthy and prosperous 2024. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.